The All Share Index is up marginally in early trade as we speak to Victor Ogiemwonyi, CEO, Partnership Investment Company, to review the Nigerian equities markets ahead of the MPC decision later today. Thank you so much, Victor, for joining us.
Thank you for having me.
Well, it's a big day. The big day has arrived. It's a day the markets have been waiting for, have been speaking for several weeks now. So many theories have been put on the table. So many of the options have been discussed as to what direction the policy MPC would take today. But let's talk about how heavy is this on the market at this time?
It's heavy because the market is waiting to hear what happens, because the decision will greatly influence what happens in the economy. So the market is kind of waiting to hear what the MPC committee will do.
Now, of course, different aspects of the economy will be considered, key macroeconomic indicators, inflation, the naira, forex reserves. But for the markets, particularly the equities markets, what do you think is the biggest concern? What is the market expecting the policymakers to direction to go?
Well, first of all, the MPC has very few options today. The naira has been under pressure for some time. And we believe that if a decision is made and everybody knows what the decision is, then people can then take positions. Right now, people are not sure what is going to happen. And you know, the markets don't like uncertainty. What we are saying, we believe that a clear understanding of where CBN is going to be, the MPC decision is going to be, will help investors make their decisions. Because there are those who are waiting to see if they can get into the markets. There are those who are waiting who wants to get out. Let us see what the decision will be. I think very clearly you can see that the fact that the decision is so weighty, that's why the market has been flat the last 2-3 days. Okay,
Victor, well, keep our fingers crossed on that. We'll be monitoring this decision coming out in about 2 hours or so. Well, let's talk about two earnings that came out, the latest earnings from the market, the GSK, GlaxoSmithKline, and of course, Champion Breweries. Looking at Champion Breweries figures, not looking good at all. We saw revenue, though, up 25%, but of course, still at a loss, 1.1 billion for the year. Let's focus on the facts behind the figures. We know that this company is on a recovery path. So let's talk about your thoughts on that.
Well, you know, Champion Breweries' results was a little bit surprising, but you have to realize that most of the brewing companies haven't done very well. Guinness reports wasn't good. MBL was just follow through on that, and now Champions. We believe that the reduced ability, disposable income in consumers' hands is affecting a lot of things, and I also believe that these losses are resulting from write-offs that Champion wants to engage in terms of what they've just sold the last few months to Heineken. We believe that with time, we are going to see a situation where if all these write-offs are removed from the books, we should have a much clearer earnings picture from Champion. Okay,
how soon would we see that happening? If they're writing off the debt at once, that's for last year. So could we begin to see the recovery perhaps from the first quarter numbers?
No, I think from after the first quarter, I think we should see better numbers in the second quarter, because this is a way of just cleaning house, making sure that you have a cleaner book. I think that's what they've done. They've taken. Don't forget that this was exactly what also happened in Dangote Flour. They decided to clean all the issues that might be in the books once and for all and have a cleaner books. I think that's what has happened with Champion Breweries.
Okay, let's quickly move on now to GSK, GlaxoSmithKline. We saw a 15% climb in top line, but profit came in at just 3.5%. Did the market find that disappointing?
Well, you know, the market is a little bit confusing right now in terms of following numbers. A lot of people have asked me and said even some of the results that returned in the banking sector are very good, and yet the market has not reacted to it. The reason for that is that investments are priced in the future, not now. If there are so many uncertainties in the market, everybody else is not able to make good decisions. The uncertainty is not good for the market. So I think the uncertainty is what is affecting everything. The results are not, they are exciting in the sense that 15% growth in the top line is good, but 3.5% return is not terribly fantastic. But the market is neutral to these results because there are too many uncertainties in the market. And until all these uncertainties are cleared up, the market is not going to go anywhere. Don't forget that today, the market is actually, priced at 13 times, which is, P ratio at 13 compared to 33 in 2009 is a very huge discount. So we need to be looking at things, clearly. We are not seeing very clear way. You cannot look to the future very clearly, and that's the problem.
Do you think it's because of the host of the factors, the headwinds that the market has experienced since the
That's
first
right.
quarter, all, of course, coming mostly from both the fiscal and the monetary
You are very
authorities?
right. You are very right. People are still worried about that. They are worried about the political stability. They are worried about the national conference outcomes. They are worried about the run on the Naira. They are worried about so many things. And these are all uncertainties. And uncertainties does not allow investors to price anything very well. So as these uncertainties are cleared up, things will be better.
Now, Victor, still talking about on the earnings front, I understand that the companies listed have until the end of the month to file in their reports. I mean, we're just a few days from to the end of March. So are we going to see a raft of earnings coming in all at once and perhaps after the MPC decision?
I think that's what's going to happen. And then don't forget that now the stock exchange is very keen to ensure that people, come up with their earnings report very quickly, and the exporter allows them to do that. So they can. I'm sure that we can expect that to happen rapidly within the next week.
Now, Victor, as a market player yourself, what's your biggest concern for this market?
My biggest concern is continued exit of foreign investors at the rate that they are doing it now. I believe that gradually the local investors are coming in, but don't forget that liquidity in the space is very, very tight. There's not enough liquidity to actually, for disposable income, is not there for people to pursue investment goals very quickly.
Okay, so what would be the best scenario for the market in terms of the MPC outcome?
I am hoping that for now they will leave they will not adjust the foreign exchange position. If they are going to adjust interest rates, they will adjust it by 1%, because that will be good for liquidity retention.
You mean taking it from 12% to 13%?
That's right. That's all I expect. Anything more than that has several implications that we may not be able to determine right now.
Now, I've spoken to a couple of stockbrokers, and they say that, yes, they know that many foreign investors are not participating in the market. They're sitting on the fence waiting for this outcome. But they also say that they've seen a larger participation by the local investors. But, of course, there's also the concern that that might not be enough to support the market, at least going forward. Do you share that sentiment also?
I agree with that. I agree with that sentiment. There is a need to ensure that we do this very gradually. If we do it simultaneously, there might be a double whammy if we have a foreign exchange devalued as well as raise interest rates. That might not be the best thing. We also hope that the government sterilization of the CCR continuing might also be another route that they might want to take. Taking it from 75 to 100%. But that in itself will also have some kind of effect on liquidity.
Now, talking about effect, let's talk about bank stocks. So were they perhaps in the line of fire, as it were, of course, as a direct impact for whatever decision is taken at today's MPC meeting? Now, going forward, your thoughts on how this is going to play out for the bank stocks? Are they going to remain as attractive, even though right now valuations are said to be still, very good? But going forward, would investors still be attracted to these stocks?
Yes, as you will notice, I've always voted with the banks. I've always said that the banking in Nigeria is still very rudimentary. There's a lot of growth. We have seen that in the numbers reported by Zenith and GTB. There's no doubt that they are going to be facing headwinds for now, but the more we look at the valuations currently and seeing what they are doing in terms of their own growth, we believe that banking stocks still have a very good way to go. Investors who have patience, not just those who are looking for money immediately, those who want to buy and hold it for some time, this is a very good time to get into these stocks.
All right, thank you so much, Victor. Thank you so much, Victor, for talking to us. That was Victor Ogiemwonyi, CEO, Partnership Investment Company.